This. Can you hear me? Test. Alright, I'm going to show a demo of what I do when I practice. I'll show you here. Make sure the sound works in your face. Okay, I verified the sound's working. So what I did is I practice on the simulation account, which is the actual platform that I use to practice on. It's called Thinkorswim, and you have to have a Charles Schwab account. So if you want to learn how to, I recommend this. Just put like $100 in, open a Charles Schwab account, enable options, and then practice for like 6 months or 3 to 6 months. But here, see, we got a good play here. What I'm going to do is do a reset, because this gives you 100,000 in virtual account money. And what I'm doing is I'm using an on-demand. That means I can go back in time and simulate trades. So what I'm going to do is do this reset button right here. I'm going to reset the account to 0 to show you what I'm going to do, to where we're going to play like a 90% probability of winning. Okay. Right now I have it set on June I think I have June 14th, right? So what I'm going to do is go go back to June. This is like a time capsule, right? So I'm going to go back to June 24th, and I'm going to put like about 15 minutes after opening, so 06 45. They say 0:46 a.m. on the 24th of June of this year. I'm going to press go. Now it's going to go back to that June 24th. And it takes about 10 to 20 seconds. Depends how fast your connection is, but it's still loading right here. You see it right here. I'll tell you when it starts. But what I'm going to do is look at a chart here. This is the I'm going to play the SPY S&P 500. Okay, this is going back in time, and you want to test a theory out or something. So what I'm doing is, okay, this is the real life. This is the back in time. This is June 24th at 6:46 a.m. California time, right? About 15 minutes after the market opened. So right now, what I'm going to do is look at the options chain. And what I'm doing is, I like to go 2 weeks out, but I usually just try to start on a Monday and end on a Friday, and cash it in on, or I cash in the profits on a Friday and then restart on Monday. But I'm scaling up. So what I'm going to do is, like today, I'm going back in time, and we're at June 24th of this year, right? Back in time. And we're at 6:46 a.m. So what I'm going to do is try to play an option play that expires this coming Friday, or this Friday. So I'm going to try to get a play that expires on the Friday, right? Friday. So the Friday is going to be the 28th, right? So what I'm going to do is I can do an example where I'm just going to do 10 delta 10. And delta 10 means that there's a 90% chance that it'll work out. So right now I'm going to look at the call side. This is the calls, and what I'm going to do is sell 10 delta or 10 delta. It has to be 10 delta or less. So the only one that shows up here is 9. So what I'm going to do here is delta. So I'm going to sell the 9. I'm going to sell the 553. Right, and then I'm going to buy the 554. Okay, we got $9 credit on that one. Now Iron Condor meaning it is that we have to do the other side. That means we're getting a credit spread. This is a credit spread. That means we're getting money back on this play, right, in advance. But we still have to have the collateral in our account. So now I'm going to do the put side, the downside, and I'm going to try to look for 10 delta or less. So here's a 10 delta right here, 10 delta. So I'm going to sell the 534, and then I'm going to buy the 533. All right. All I'm worried about is the one I'm selling has to be 10 delta or less. So now we got a total of $17 credit. So now what I'm going to do is I'm going to simulate like using $1,000 worth, because this simulated virtual account gives you 100 grand, but I'm only going to use the money that I would normally use. All right. So I'm going to be 10. Let's see, because I put it like $1,000 at a time. So let's see how much money you would use. So this is going to use $840. This will technically use $1,000, but we get the credit back of $160. So this has a potential of $160 profit by this coming Friday on this virtual account. So what I'm going to do is I'm going to edit it, and I'm going to put like a couple cents less so I can get filled. So I'm going to go 14. So $14 times 10. So we have the potential $140 profit on $1,000 by the Friday, this coming Friday, or not this coming, but the Friday of this virtual account. So I'm going to confirm and send. See, we're going to get a possible $140 profit, and the collateral is $860. But technically, the collateral is $1,000 minus the $140. That's how it gets $860. So I'm going to send it in. Okay, we got it. All right, we got it. So, now what we did on our play here, as we see, we have this is called the Iron Condor, where we wanted to stay between 553 and 534, right? So if we look on the chart, yeah, here's the points here, the 2 points. So the price is right here, right in the center, right? So as long as the price stays within this range by Friday, we're going to collect the $160, whatever we got. We got the yeah, $150. 15 times 10. So we get a potential $150 profit on our $1,000 collateral. All right. So it's more than 10%. So now what I'm going to do is fast forward, because this is a virtual back in time account. It's called on demand. It's just the coolest thing. I don't know if there's any other platform that's better, because I never really use any other platform other than Thinkorswim. So now we can actually go forward in time. Like it's right now, it's Monday at 6:50 in the morning. So I'm going to go back. I'm going to go a couple days, like the 26th, and see how it's going to be doing this actual play. So now it's loading. It takes about 20 to 30 seconds to load. So we'll just wait till it's done. But we can look at the chart. See, we want it to stay between 553 and 534. It has to stay between that, right? I think it's going to catch up right now. There it is, catch up. So exactly 2 days ahead of 2 days forwarding, it's the stock current price at the exact same time as 544, right? and it's currently 544, so it's like in between these two prices, right? It's actually about yeah, we have a 30-point cushion about. So and we see right now 2 days later we're making $100 profit, right? So technically we can just cash it in right now and collect the $100 profit. But since we're in a good position, and if we look here, we currently look at the deltas, it still stays about 10 or so. See the delta's 4, so that's super good. So that's like a 96% chance we're going to win. And on this one, it's a 4. Oh, it's a 4 also. So this is like over a 95% chance this will win, right? So what I'm going to do is fast forward one more day to the 27th, about the same time, 6 in the morning, and see what it shows here. So it's going to catch up. It takes 10 to 20 seconds to catch up. It's going to go to this time in the future, June 27th. And you'll see this probably pop up if it stays in between these two prices, 34,553. We'll pull up the chart. I think it's okay. It's cut up. So then I'm going to zoom in on. This is June 27th at 6:50 in the morning. At that time, it's taken a massive drop. But let's look at our trade. And right now, it's still in the center. Look at our delta is only 2. And our delta is 3 on here. So we have a massive amount of cushion. That means this is almost 100% guaranteed we're going to get that $100 and something that we started on Monday with, right? So I'm going to fast forward until Friday about the same time. And we'll look at the monitoring how much money profit that we collected. So this will probably jump up to, see, we're 80% of the profit that we collected. So it takes about 10 to 20 seconds more. So this actual trade worked out. So that's what I'm doing is I'm actually, you can get closer to the price and sell the up and down at a closer to the price and get more money, but I'm playing more safe the last 2 months to 3 months, so I'm collecting 2 to 3, maybe $200 a week or $100 a week. I'm not risking that much money, so I'm gonna make. I want to be stable, not worry about making the money. Just stable for like at least 2 to 3 months, where I'm having a winning week, no, a winning month every month for like 2 months, 3 months. But as we see, this thing caught up. We're at $130 profit on this play, and we have a potential 10 times. We have $150 possible maximum profit. So these options expire today, the June 28th. So what I'm gonna do is fast forward in time to almost closing time. Like 5 minutes before closing, I'm gonna press enter. Now it's gonna fast forward to 5 minutes before closing on the Friday, the June 28th. And we'll see, we'll jump up probably to 100%. The full $150. So let's see what happens. We're still waiting. All right, come on. It'll jump up. Let's look at the chart. Oh, there it is. Okay, bam. Let's see what it shows. See, 100%. So the play would have worked out, and right now I can cash this in 5 minutes before closing, or just let it expire. Just leave it alone, and that $150 will stay in your account as profit. So that's one example, and I can do it maybe 5 to 10 times in a row, and it'll win more than 70-80% of the time. But because of a volatile market, like when the government says they're going to raise rates and lower rates, that you probably don't want to trade on that day or so. That's an example of iron condor where we're doing 10 deltas. It means it's a 10% chance that it will go to that price, or a 90% chance that it won't. So that's it. That's an example of that. Ciao.